So we are discussing on 10 factors that affect a nation's economy and their currencies. Take note, one is that the strength of any country's economy affects the currency. It goes together. The strength. Why some countries' economy does not affect their commodity price, because commodity is a global market, and sometimes some of these countries that owns all this commodity does not have the market, and they don't own the market. For example, Nigeria has oil, but the price of oil is not determined by Nigeria; it's determined by the international market. Do you understand? We also have gold. South Africa has gold as well. The price of gold is not determined on South African economy. Is determined by the international market. So, but the strength of your currency is determined by the economic strength of the country. That's why you need to know. But now it's not everything that influences it on the long run. Those key factors that influences it is what that is more important on this fundamental. We try to stop. We try to keep fundamental afar, because most traders don't like fundamental analysis because it's not practical. It's more of theory. Some of you can get bored about it, but it's important you know it. But now I'll try to make it more practical after this to make sure we show you on the chart and how you can also get a fact. And I have a more external this thing I will share with you as I proceed. It's not just only going to be on slide. Then one of them is interest rate. Some of you must have known about it, but don't get bored about it, because the way I will give it now, you may get another insight on it. You know about the interest rate, but take note about this interest rate. Note you have to take care is that this particular area, this is the note you have to take. So as a trader, when you hear about interest rate, you try to ask yourself whether the interest rate is high or low. Do you understand? Now, another thing you also need to know is, one, you try to know the country's economy that has that interest rate. Where's my whiteboard? So you try to ask if the interest rate is high. Then you also try to ask if you try to ask or try to know the country that owns that interest rate. Because of you can't just say what influences the currency market is interest rate. Which country's interest rate? If it's Britain pound, you try to know their interest rate. Now, another critical thing you need to know is this. Since it's currency pairs, you also try to know the interest rate of another currency. Do you understand? So you try to know the interest rate of the other currency, because you're trading both of them against another. Now, let's make it practical here. If you have if you have USD, interest rate 7%, and you have JPY. This is USD. Then you have JPY, the interest rate 3%, JPY. Now on USD JPY, so what is most likely going to be, what is most likely going to be the outcome?
It will be a buy.
Okay, why?
The interest rate of USD in this case is higher than the interest rate of JPY.
Fine.
So USD will most likely be stronger than JPY.
One, now, because of that, you just know one factor. That one factor you have identified between USD and JPY, meaning United States economy and Japanese economy. One, you have seen that the interest rate in USD is high, but don't buy and don't sell. Do you know the reason? It's not only one factor. We have to get another one.
Okay.
Yeah.
Okay.
Then somebody is trying to do something. I don't know whether you're copying something or you're doing a screenshot. Please don't always be kind with us so that you won't interrupt it. Then another one, okay, I've told you to take note of this in a high interest rate because you need to get this thing clearly. High interest rate have attract foreign investment. So if interest rate of your country is high, it will attract people to come and invest so that they can get more return. You just know it as a basic information. It's not that you have to apply it into trading. But if interest rate is low, it won't attract foreign direct investment or foreign investment, but it will help those who are like the natives, the indigenous. They like it to be low, you know what? So that they don't have to pay more in case they collect loan. Do you understand? So, but the one that influences the market more is the highest interest rate because foreign investment boosts the economy. Now, this is where fundamental is very important. I just want to make it easier. So when you say that there's high interest rate, then you may start trying to investigate that country, knowing what is the inflow of foreign direct investment coming in. It's another cause where we can be able to track those informations coming into it, so that we'll make it easier for you where you know it as a figure. You do understand? Just like as a statistics. So you can be able to know that, okay, this month or this quarter, mostly this quarter, that this particular currency is strong. So I will trade against this one. Even if you're a day trader or a scalper, but you be scalping or trading more on one direction than the other one. So just at the same way we told you to buy more of gold and sell. It doesn't mean that gold will not sell. Gold will still sell, but we try to buy more than we place a sell. Then another one is I don't know whether that one is clear now. Is it clear? Or whether it's complex?
Yes.
Are you sure it's clear?
Yes.
Yeah, so please take note of that. What you did on the interest rate now.
So, Mr. Ochi.
Okay.
So just to ask, you see this interest rate, like you mentioned that it attracts high interest rates attract foreign investments. Now, on the other side, it stimulates lower interest rates stimulate economic activities in a country. Now, these economic activities that this lower rate stimulates, wouldn't it help to strengthen the currency of that country?
Yes, it will help. Now, that's why I told, is it Mark that asked action to hold on, make you not just go and buy. Because we have to consider other factors and summarize it.
Okay.
Yeah. Okay. Do you understand? So when we get the whole factors, because somebody can put interest rate down because of another benefit.
Okay.
So when we get these 10 factors, we try to summarize it and get the one that is bigger than another one. Then we now know that this part of this economy is good, this one is more better than it. Then you trade more of that particular pair that is stronger than the other one more.
Okay.
Because fundamental is what keep you in the market for a long time, while you keep praying to your God or to your to Allah or to your juju, make the market reverse, and it never reverse. Is this thing that, do you understand? Because of the economy you try to trade against is far stronger than the one that you're supporting. Do you understand?
Yes, I understand.
Yeah. So now another one is inflation. All of you know about it, but let's also get a point from here. Now, you know why our currency is weak? It's because of this. That's one of the reasons. And of course, our trade balance is also very weak. That one has been weak for almost like 20 years. So now, is it, Idris, that when you get this particular currency now, you are analyzing, let's say you're analyzing dollar and Japanese yen, the United States. So what you have to do, we also ask yourself, you ask yourself, what is inflation level in Japan? Do you understand? So what you can do as a trader is to ask yourself too, what is the inflation level in Japan? Now, let's say, for example, the inflation level in Japan is 1, okay, I think it's 2% these days. So 2% JPY inflation. And inflation level in America is 1% USD. Inflation. So now, on USD JPY, what will come to your mind?
Yeah, the dollar is stronger.
Yeah. So now, so technically, let's assume these are real market, like real stuff. Because this thing, you can get it easy in your, don't bother yourself how to get it, very much easy. Now, you have seen that 7% was for, the interest rate of United States was 7%. Now, you have also now identified 1% inflation. Do you understand? Then, which is USD. Then JPY, you now also have seen, I think 3% plus 2% inflation. That is JPY. Idris, you see the reason why I told you not to just buy, because of one factor. We talk about coherent theory. Do you understand now? So you take note of this. You know, I can be forgetting all these things. Always be reminding me. So you see that this one, you have also seen that based on inflation, that the United States inflation is also considerable, okay. The interest rate is also considerable, okay, more than JPY. So you're not just getting only one factor. You're getting more. You have gotten more than 2 factors in support of dollar, and 2 factors against JPY. Remember, don't fall in love with any other whether you should buy and sell. Assuming it's also opposite, is something that we try to check. Do you understand? Then this is what you as a trader is interested in. It's not just to know inflation. Everybody know about inflation, know about kind of interest rate. Then another factor we discuss. Just be taking note of this, because we are coming out at a point somewhere where you know whether we should buy or whether we should sell. Another factor you need to also put into consideration is this GDP, where I think Felix, this is when you asked me that question. So sometimes you may be seeing those inflation, the interest rate, whatever, but the country may have very strong GDP. But that's what is called chain reaction. If the GDP is okay, it will also attract foreign investment. Now, if interest rate is high and GDP is poor, it will not attract investors. Because of investors, sometimes they like stability. They prefer to go to that to that country that has 2% GDP. Do you understand? And have good 2% inflation, and also maybe let's say 2% exchange interest rate, and a very low GDP, a very strong GDP. You don't understand? Like the interest rate they are getting is not high, but they have a strong GDP. Because sometimes companies or countries, they tend to increase the interest rate when they are looking for money. Just like you too, psychologically. If you need money and want to take money or you want to borrow money from your friend, you may give your friend much better deal so that to get that money from him. Maybe so.
Yes.
So ask him to give you the money that you're going to pay him maybe interest of 10% because he really, really want that money. Now, so what you need to do again as a trader, please take note. And another thing, you check the same currency you're trading. You could just ask yourself the question on Google. It is not too hard. Although, as those who are under our mentorship will be helping you to do all these things, because after this class now, where some of the things we'll be giving you is to be telling you we are expecting buy here or sell here because of this and this. Do you understand? So the first thing you should ask yourself also, what is the GDP? Of United States. Then you also ask yourself, what is the GDP of Japan? I'm so sorry. How many does this in even before now?
I know it, but I don't understand how to apply it.
Sorry?
I said I know some of them, but I don't understand how to apply them.
But I mean, you know them as like the information level, but not an application level.
Yes.
I know. That's why I told you that don't just get bored. You may think that it's not the same thing they always tell us. Application is a problem. How to make use of those things for profit. So you ask yourself internally, okay, since they said GDP, I'm telling one place against another. What is this thing? So we have to get more factors. Now, as you have asked yourself the question, you may discover that maybe GDP level of United States GDP is let's say 6%, because sometimes it's always high. Then JPY GDP. which is, I mean, when I say JPY, I mean actually the currency. JDP is maybe 4%. Yeah, perfect. It's 4%. Then remember, you are gathering your data. So you have seen that you have 7% for United States. You have 7% for United States. You have 1% for the inflation. Then you have 6% for the GDP. Do you understand? Then JPY, let's say Japanese. We had, can you remind me, we had 3%, the interest rate plus
2% inflation rate.
2%, then plus 4% GDP.
4%. Yeah.
So now you are getting some factors now, because this is, I'm telling you, it's not by assumption. That's how it works. You are most likely, you can never get the same pair or the same economy equal. It's a lie. I won't say it's a lie. It's not possible all the time. There must be, like, you know what I mean? One must be in one way bigger than the other. So, but one can be extremely performing poor than the other, but it may get the one that's like ranging. Maybe the difference could be like similar. Then on that level, we will now be able to develop a strategy to trade it, since you know that the other currency is also very much good. So and you will see how it will be affecting on their chart. Their chart may not be going in one direction. You know, those charts that keep going in one direction, it shows that the other one is extremely stronger than the other one. I mean, like one currency or one economy is extremely strong. So now you see that this is the thing you need to be knowing as a trader. So when you know those things, it began to compare it. Since you have already known those factors, compile those factors together and summarize them. There's also another thing you need to know. Just be following me. Let's see how far we can go. We have talked about GDP, right? Then another one you need to take note is this. Trade balance. So this trade balance is import and export. But on this trade balance, there's something I wanted to take note about. Some countries does not have their source of economy may not be may be on export more than import. Do you understand? So a trade balance surplus strengthens the currency by increasing demand for export. For example, China export more, I think, than they import, because so many companies they produce a lot of things, so people buy from them a lot. Well, then the EU zone, they import more. Do you understand? So you may ask yourself, what is the trade balance percentage between this country and this country? I mean, the same method we have used on all this level. Again, what is the, like, for example, if you want to get this in from China, you may also ask the same question, the level of export coming from China. So it shows you that it's actually the economy is actually doing good. But where you're focusing, where you're trading on only between a pair and a pair, you need to focus more on the strength of those two economies. Do you understand? So now, let's also say that Japanese has between these two countries, United States and Japanese, that their trade balance capacity is USA maybe 10%. Then Japanese could be, let's say 8%, okay, or 7%, yeah. Do you understand? Then you take it into consideration. I try to make it as simple as possible. This thing now, you can do it even after this class. Just use 1 hour. Those 10 fundamentals, we're talking about 10, is the 10 most thing that controls the economy. And that's why those bigger things. So once the percentage is high, you know that currency is very high. So that currency is very strong. Do you understand the essence of these 10 fundamentals? Those 10 major factors that controls the economy. If the percentage is high, you know that that country is a good place to invest. And the economy, their currency will be strong. Do you understand? So now, add 10% here and 10% there. I don't know if anybody is taking the note.
Yes, I'm taking the note.
Okay. Who else is taking the note?
So I'm taking the note.
Okay, perfect.
I'm
So
taking the
now
notes.
we are actually doing it like gathering the data for, sorry. Okay, then let me try to be fast because we are spent we have few hours to go. Then another thing, we are on 51, right? So let me try to be fast. Another thing is growth to GDP, or sorry, government debt. People also call it debt to GDP. You see, this one now is a strong economic impact that drive a nation economy. High debt level deters foreign investment and may weaken the currency. So now, what you need to take into consideration here is trying to ask yourself, what is height or what is the percentage of the debt to this particular government? You don't understand? The information is there on the Google. So that's what you have to ask yourself to first before you start making a decision. What is what is the debt level about this particular economy? For example, let's say their debt level is Japanese JPY. Okay. Let's say Japanese is Japanese debt. Let's make it let's say maybe it's 8%. And United States is sometimes United States, they like to own, I think you know, they used to own money well. Let's say it's 13%. Then you write it down. Then another factor you need to consider sorry, I made a mistake. Another factor you need to consider that drives the economy of any particular currency you want to trade is okay. No, political stability and policies. So this one does not have any percentage, but it has a strong impact. It's like following the event. So we have to skip this one for now. Do you understand? So, but it's a very strong impact. For example, as Donald Trump won the election in the United States, the only statement he made, look at how the market reacts. So the policies of a particular country, like now, Donald Trump is coming with tariff tariff policies and other policies that may come into place, including sanctions. That is part of political stability and policies of that particular country. So a stable government attracts investment and strengthens currencies. So political turmoil increases uncertainty. So now this one is part of it, but you don't have them as a figure. But obviously, if you know a country that is very, very stable, you should know, for example, like those top currencies we are trading, like Eurozone, Japanese, Chinese, United States, you know, those other currencies that does not have much of war. So there's chances that we will be having a very good policies. Now, government policies is also in a chain reaction with the above information that we shared. For example, policies can affect the interest rate decision, can affect the inflation. Do you understand? Can affect every other one. It can even the GDP of that particular government. So now it's like a chain reaction, but this one does not have like a percentage. You need to grab like a figure, but it's much easier for you to excel well as a trader if based on fact. Those facts that the policy they have made has already like resulted into the inflation going high to a certain percent, or their interest rate going low or going high to a certain percent. So it's a concurrent reaction. Do you understand? So now, then you also have to consider the foreign direct investment. So this one come in figure. In figure. Do you understand? So now you ask yourself, what is the foreign direct investment? What is the FDI of maybe USA and Japan? Then, so you can say for the year 2024. Do you know the reason why we mention year 2024?
No, sir.
Because what is on ground will determine the future reaction of the market. Do you understand? For example, now, if there is already a very positive report on foreign direct investment or last year, those companies are not leaving immediately this January. So it means that that country this year will be fine. Now, if the foreign direct investment of United States is 76 billion, okay, trillion, because of their big country. And Japan may be like 50 or maybe 60 trillion. Then you put that into consideration. And POM, remember that debt of United States was higher than the debt of Japanese, based on our assumption analysis. But these are facts. We could get somewhere. This is only what you have to ask yourself. So now, when you ask yourself this figure, this amount, you'll be able to see it from either investing.com or Reuters or Bloomberg. That's always where you get it. I'll also show you how to get those things. You get those figures. Of course, you already know that if foreign direct investment, United States 76 trillion and Japanese attracted 60 trillion, that's last year 2024. Remember, they may also be having the ones in their country before this time. I mean, the existing one, and they attracted more 76 trillion. That means you take into account. Then you continue your journey. Another factor that influences those countries is also what you call central bank intervention. Their central bank influence currency value through foreign exchange market. Example, their reserve, their monetary policy is more of FOMC. This one does not have figure, is based on the same thing. So we will not put it into consideration because their decision or intervention reflect on the exchange rate, interest rate, and it can also affect the inflation. Do you understand? So now we have commodity price. I think I should change this commodity price to retail sale. I should change it to retail sale. We consider it as retail sale. We consider it as retail sale. Please take note, because on retail sale is the value of goods. Yeah. Retail sale and core retail sale. Yeah. Then you ask yourself, what is the percentage for the both? This is number 9, right? Now, on this thing, why I change this commodity price is that it has to do with commodity. Is a percentage of the consumption value of what is available in the country. Do you understand? So it's better I change it to retail sale. It's more understandable for everyone than this one. So core retail sale is a percentage of wholesale price, which could be people that bought those commodities in quantity, a large quantity, like on a wholesale price. Now, let's say Japan is the retail sale is always like 3%. It don't used to be too high. It's 3%, and United States, the retail sale is maybe 4% or 4.5. 4.5%. I hope you're taking the other note because, you know, when I change my slide, it will move off.
Yes, sir.
Yeah, perfect. Then this is what you need this information for. It's not just you try to ask to get the figure. What is the value of consumption there on a wholesale or on a retail level? What is the value of consumption of their commodities, which is consumable goods? Then the last one that is very, very strong is what we considered to be unemployment. So we're not going to consider this one. Leave it. We'll replace it with unemployment. You know, there are more, but this is what unemployment. Why I remove unemployment on my slide is because I have it as a different cause. Unemployment rate. So from this name here, rate, you should already know that this unemployment has to do with the ratio. Then, since we are using Japan and United States as a case study, you ask yourself, what is the rate of unemployment? Let me just use UN, like unemployment. What is the rate of unemployment? Do you understand? Now, have you seen that these are chain reactions? Because if GDP is okay, it means that there's production going on, and if production is going on, it means human beings are employed. Do you understand? So one factor influences another one. Then if there are more employed people in that country, it will also boost the production. And if you boost production, it will boost trade, it will boost retail sale, it will boost core retail sale. Then it will also attract investor. It will also kind of reflect on stability of that particular country. Like, you know what I mean? So everything is interconnected. That's why we need to get all the factors based on figure, like report. They are all interconnected. Now, if Japan is, let's say Japan is unemployment, the country that has higher EBC will definitely have higher, will definitely have a higher unemployment. The country that has higher GDP, we definitely most likely have low unemployment. So in the United States, I think unemployment level in the United States is 4%. I think currently, I will check it again. It's 4%. Then, which is USA. Then Japan will be most likely maybe 6% because of their own. Let's say Japan is 6%. Japan. Now the question is to you now, Idris. Based on what you have all gathered, which country is possible to be performing better?
USD.
Then
USA.
Okay. Then when you come to this pair, when you come to USD JPY, you know that when you summarize these factors, you're definitely going to get a higher result for dollar. For United States, it shows you the United States economy is good. What you'll be considering more to do on the chart is buy. What you'll be considering more to do on their chart is buy. Remember, that will be sell. So how do you apply that in trading? Let me show you. Oh, I almost end the meeting where I wanted to close this whiteboard.
Mr. Achebi, please, before you go to chat,
Okay.
there's one of the factor I want to ask question on.
Okay.
FDI.
Mm-hmm.
You know, some of all these issues like interest rates, GDP, inflation rate, trade balance, you can get multiple data in a year.
Mm-hmm.
So, but for FDI, is it yearly information we should be looking out for? Is it in a year that you can know the foreign direct investment into the economy? Or is it that it's something that you can get in a monthly basis?
No. It's not a monthly base. You can get it yearly. Yeah. Like you asked a very intelligent question, but it's not monthly. No, it's not monthly. Foreign and direct investment come in. Let me even get it. Let's even Google itself. So that I'll get my fact right. Yeah, that's a very intelligent question. So how often does a country publish their foreign direct investment report? Yeah. Well, I've not published their FDI report. I'm already like making research on it immediately. Okay. So kind of it's published quarterly. It's also published annually. You can check it there on Google. So it's mostly published quarterly and annually. What did you get there?
And what I get is that is a quarterly report, but it looks like it has been replaced with another report.
No. It's produced. It's published every three months.
It's quarterly. Yeah, it's published quarterly.
Yeah. You asked a very intelligent question. Yeah. It's published quarterly. Now, let me share something with you. Okay, sorry. Let me finish on the chart. So I think you can see my chart, right? So
yes,
somebody said,
yes.
after considering all the factors on USJPY and you enter trade for buy, how long can you expect to hold the trade? Or how do you know when to leave the trade? That is when we come into trading plan, your investment plan. What are you expecting? And it's also a very nice question, but that question does not have a direct answer. Now, it doesn't have a general answer. The answer is like subjective to you. Now, we have seen that JPY report is good, but United States report is better. And their market you have access to is to trade only on their currency against another, right? So the first thing you will consider is to, okay, since now I want to trade JPY this month. I'm sorry, I want to trade USD JPY this month. What is their market price saying? Now, this is the chart. I think you can see my chart, right?
Yes, sir.
So if you check the both current, those things we are assume now and analyze, you see that the deficiency is not too far from each other. Let's say it can be 70 over 100. This one is about 70%. This one is about 100%. So now you ask yourself a question, how do I trade it on here? For me, what I would do is to check their chart. Try to know the position of their chart and what their market is talking about. Now, on that factor, assuming they are all exactly what is happening, I will show you something again. So it means that in this chart, you'll be having more buying power or buying trade than you are selling, because United States will be US dollar will be gaining more strength most of the time than Japanese yen. But I will consider the buying price and the selling price. One thing I will consider as a trader is this. One, since Japan also have strength, it means they have chances of also having a very good market rebound at any time. So their report is not extremely bad. I will now look out for places where their market performs good. For example, you see here, if I place a buy here, I'll be very careful. Do you know the reason?
Because of that.
Well, maybe it's very close to supply zone.
Sorry?
Maybe because of that resistance level.
Yeah, maybe just on technical terms. But the reason one of my reasons is this. One, Japanese is also very strong, but not as strong as USD because of the resistance level. Fine, but that's not only my reason now. I told you that if we have a data that some of these currencies is also strong, but then you have to correlate it. Like if you check that figure I gave to you, because of time, we may not be able to like subtract and minus each of them. You will see that their differences are not much compared to dollar, and their market is high, is already at this price. I'll be very careful to buy it because of Japanese may gain strength at any time, because of they have very good GDP. They also have a very good like trade balance. They also have a very good foreign direct investment. But now, in a situation where you open this chart and you saw it here, do you understand? Remember, when you open your chart and you saw it here, and United States is good, is obviously a very much good economy than Japanese yen. Me personally, I will buy more. I will have more buying like confident than when the price has gone up to this point. But I can still buy here, but I'll be very, very careful with this particular point. But now, one thing I have known is that I've already known that Japanese is weak and the United States have more strong fundamentals that can push it more up. Then, on another level of how to trade this market, if this market will keep going up and now retrace again to this point, I will be able to buy again. So the strategy I will employ here is I will buy more of USJPY than I will keep selling it. Do you understand? Now, who asked me that question? I think it's Odile. Odile, right? Odile. Now, look at what I would do. Because of United States economy is strong than the JPY, if the market is high, I won't like to buy it despite that it's strong because I want to buy at a higher price. But any little drop, any big drop from them, I would like to buy more. That is the strategy. I don't know whether I answered your question the way you expected it. All of you is quiet. It's like what I'm saying is totally what you are not expecting.
We are digesting
We
it.
are with you.
It makes sense.
It's not clear, sir. Understand what I want to achieve with you. I want to achieve something. What will make you to buy more than selling a particular asset is the strength. Remember, it does not mean that that particular pair will not be selling. It will sell, but me, because I've already seen that this country is more better than this country, I will be of the side that is strong more than the side that is weak. But I also consider the price. Okay, I did a research. Let me share with you. How do I share this thing? Okay, let me do a screenshot.
So, Mr. Ocho, why are you doing a screenshot here? Do you mind if I ask a question?
Yeah, ask a question.
Okay, can you open a USD card chart? Let me show you that.
But let me finish the screenshot. I will open it.
Okay, when you're done.
USD what?
USD card.
Okay. This is it.
Put it on weekly. Let me show you that. Now, can you squeeze it more? I want to show you supply zone and demand zone.
Like this?
If you squeeze it, you will see the previous or resistance zone. Okay, so if you squeeze it, you will discover that
like this.
You can still squeeze it more. Okay, now if you squeeze it now, look at if you identify demand and supply zone. Although prices have broken out from the supply zone. Now, if for instance you open this chart now and you see price on a demand zone, or let me use supply zone for instance. Now, it means by technical analysis that based on the average price movement, that chart supposed to sell ideally. Now, you now come and do this comparison of what you have taught us now, these fundamentals. You now compare the two economy, USD and CAD. Now, if after comparison, you now discover that USD is weaker than CAD in terms of the economy. So that means it's supporting that technical bias that chart will most likely sell.
No, see, can you rephrase that question again, please?
Okay. If you compare, as this chart is looking like this now, if you now do the 10 fundamentals of this USD and CAD, now, if at the end of the day, assumption, you now discover that the economy of CAD is stronger than the economy of USD. Now, it means that this chart will most likely sell.
Perfect. So now, as a trader, I've gotten a fact and an opportunity at the same time. Once it happens like that, you have gotten a fact, an opportunity. But where you got a fact, but the opportunity is not there, I will not invest.
Okay.
Do you understand? So, I mean, I will not, so when I see it at a good price, remember, there are other factors, I will invest more. This is how big traders make money.
Okay.
Do you understand? So, that question now is a very perfect question in terms of following the our analysis. Now, let me know if I can share this in with you. Let me if I can share the screenshot with you. Yeah, perfect. Can you see this I'm sharing with you here?
Yes.
Please, what can you see there, please? So I did analysis following those factors. I hope you can see indicator, right?
Yes.
So I use Japan, Eurozone, and United States. So I compare their unemployment rate, their GDP growth for 2024, then the inflation, their non-farm payroll, do you understand? Their labor force, their retail growth, their industrial production, their trade balance, and their debt. So after my whole stuff, the strongest, this is fact. It's not like what we just did under assumption. Orderly, please take note. So on GDP of America is 3%, was 3%. Then the Eurozone was 0.8% and the Japanese was 0.3%. Then the unemployment rate of America was 3.7%. Within the EU was 6.3%, and Japanese was 2.6%. The same way with inflation. Inflation here is 2% of here. This is this is the entire quarter because they have published the last quarter. Here is only on third quarter, but why within the EU was only 2.4 is 2.4%, slightly lower than the United States. Why here is 2%, also lower. But at the end, this people does not have direct non-farm payroll. So at the end, let's say on trade balance, this guy has 78 million. So this one have surplus narrowly. This one has fluctuating and weaker export. Japan has a weaker export and it fluctuates. So at the end of the day, the strongest currently now is United States, and the euro is improving slightly. Take note of this, improving slightly, meaning that they are also strong, they are improving. So if you invest, you have chance of making money. Then this is Japanese is 260% highest globally based on their debt. Now, let me share another one with you. Oh, I did not get everything. their interest rate was moderate. The United States, my information here was that it was moderate. While the Japanese own, the United States was the EU interest rate was reduced to 3%, and the Japanese interest rate was increased due to the inflation. Now, look at my observation. I will show you. Yeah, I've gotten what I want. Yeah, perfect. So when I compare all of them, I want to share that screen with you. So I did a comparison. Sorry. Yeah, perfect. Can you see my screen now? Yeah. Can you see my screen?
Yes, we can see.
Yes, sir.
So now, after the watching those things that we did on learning, I've already done my homework, and that was exactly what I was doing before I arrived at my conclusion. So when I compared all of them, this is the report I got. So on the currency trend, this was what is most likely going to be the outcome, or the current outcome of Japan. This is the current outcome of euro. This is, of course, the current outcome of dollar. Now, how do you not trade it on the chart? So what this means that in this first quarter, we may also experience weak yen, weak Japanese yen. We're also most likely going to experience weak euro. And because we have a strong dollar, likely. So now I'm giving you the tips. Take note. So we are going to experience strong US economy this first quarter. Then we will also experience weak euro, likely. And of course, weakening yen. So how do you now put it into trading? One, if you come to your market here, please just take note that this year we're most likely going to experience strong dollar. Because of that, when you know that dollar is strong, the thing we'll be looking at for is opportunity to trade more of dollar than every other currency. Now, as euro is here, anytime we see a very big rebound on euro, for example, like rebound now, for example, here is a current last price of euro. This is the current market, and is bearish. So it's most likely that this market may come bearish to this point. Do you understand? And if you get to this point, the market may rebound back maybe to 1.04. Anytime we see any rebound we have to position ourselves to sell more. So even by any chance, we see a bond that will just shoot up to this point, 1.05 or 1.06. Don't panic. Find opportunity to sell Euro USD. Why? Because the United States economy on a long time is strong. So it will always have chances of dominating Euro this time. This is the beauty of fundamental analysis, because it gives you direction. That one does not mean that we are not going to be experiencing buy. We'll be experiencing buy, but buy volume will be lesser compared to sell volume. Now, here now is JPY. We're on weekly chart. On this note, the strategy I will explore here will be mostly buying strategy, but I will not be buying at a higher price. Why? Because dollar is strong for a long run, but there will be sharp drop because of the JPY economy is also very strong. There'll be, what I'm teaching you is how you can make a lot of money on a long run. There will be sharp drop because JPY is also very strong, very strong too, but dollar is stronger than it. So anytime we see any drop like this on JPY, we have to trigger immediately to buy. Once we see any drop and that drop started consolidating, immediately we are buying. Or even though nobody is there to direct you, make sure that any slightest mistake, you see a sharp drop, it has got an opportunity for you to buy. Then, if you want to trade on a Japanese, like in favor of them, always be buying selling them at the highest point of the market, like the highest price, what you consider the highest price, or what you consider the sniping point, like here. Let me use weekly chart. Like sniping point. The sniping point could be here, somewhere here. Maybe if this market should go up to like being at this point, it becomes a sniping point, then you can sell. Do you understand? You can sell. But once the market dropped, fall back like this, then buy. What we are saying on this area is that United Dollar State, the USD is most likely going to dominate on a long run than JPY dominating on a long run. This long run is why people lose money, because you may see that market is going down, you think that it's falling, let me start selling. Only for you to sell, come back the next 2 days, the market has gone up because of this thing. Any question? Any question?
I think your explanation is good so far. Well, how do we do for other economies now? This one that I've not done, apart from Euro and JPY. We would like to do for other economies.
Yes, it is also the same rule. Now, I told you, for example, if we are doing on CHEF, the first thing we ask yourself is, what are these 10 factors? These are the things that controls each country's economy. Or we can say, let's say CHEF, what are the things that drive the CHEF economy? Those mutual things that drive that economy, we check the percentage and trying to compare it with another currency we are using. And these are the things that we always get on the Google. Then, so when you compare it finish and you discover that Japanese CHEF is good, United States is good, but remember they may not be equal. One will be a bit bigger than another one. Do you understand? But once you have seen that level, and then now you come to the chart, you see that JPY CHEF is actually very high in price, and they have also a good GDP. They have one or two things. They understand that's okay. It will give you chances to sell that currency because of those factors. But now, selling on that currency will be of lesser action than buying, because the base currency is strong, is a stronger economy. What that one means that anytime you are coming in here and the price dropped, you see like a very sharp drop here, then because of this economy, which is United States, is strong, you have to buy. I don't know whether you guys got my objective. Objective of this course is to tell you why people lose more money and why people enter into a wrong position. Is because of these things. You may not know that this currency is stronger than another one. As for example, you see that this currency has gone up, like continuously keep going up. Have you not seen? It's on there. Do you know how many sellers have lost money? Do you know? That is since October, since September. Do you know how many sellers? I think those people that belong to all the signal group, that they have not asked them once in a while to sell here. Ask them here to sell here. They know what happened next. Do you understand? I hate time to say that they have not asked them to sell here. But after the sale, what now happened? Can someone explain to me? In fact, even here, I will not be asked to sell here. The muscle officer have also been asked to sell here. Then after the sale, what happened? That's why I told you, because of that, all these fundamentals we have, when we see that the strength of this particular economy is stronger than this one, that one that is stronger, we consider to buy it more than selling it. Or we consider to sell more on it than to buy it. Depending.
So, Mr. Uche, now another question I would like to ask is this. Now, considering the 10 factors, do you have to wait until the 10 factors are stronger than the other economic, or when 2 or 3 is okay, you can take it to be a buy currency?
No, you see, what you have to do is just to do your first analysis. Like this now, I'm giving you now is a live analysis. The one I showed you on screenshot. We have already done everything. It's called a dollar is strong already. So because of that, we'll be investing more on the side of dollar than any other pair that is paid with dollar. But now, ideally, it's good we use a weaker currency because euro is relatively strong. So euro can go up at any time. Anytime euro go up, they will sell more. That is the beauty of fundamental analysis. Do you understand? So
yes.
Sorry.
Yeah, Mr. Uche, sorry, just based on what the last person asked, because when you were talking about these 10 factors, you mentioned these interest rates, because it says sometimes like, the government, they can decide to opt or increase the interest rate so that they can get more people, right? So does it mean like, we have to wait for these 10, or are there some particular ones you can just wait for, like maybe 3, 4, 5, if they align together, then you can determine that this particular currency will be stronger than the other?
Yes. But kind of interest rate is one of the major factors that influences, but interest rate is not changing every month. I think it's released quarterly. Okay, America does their own, I think, monthly. So now, when you get GDP, sorry, this is what you need to do. Each particular country has what influences it, but interest rate is always part of them. For example, China, what influences China is more of export power, not import. Then the Eurozone, what influences more is more of import power, more of what they do more is they do more of import. So where a situation where the Eurozone, they export less that time, it means that they spend less, their capital inflow was lesser. And so it's a sign of their good economy. Then you check the GDP is okay, you check the unemployment rate is okay. Then you have gotten some factor that is better. And now if you are trading euro with Asian currency, it means that between euro and maybe Chinese yuan or Japanese, it means that there was lesser trade from euro to them. It means that euro is gaining strength between these two currencies or between this particular pair. Then it can buy more. It can buy more of euro than this one. That's why you must have to compare the pair you want to trade with their country. Do you understand? I know you guys like, but
we're still trying to understand everything.
I know. This meeting is recorded, but you must understand it is a must. It's a must. You must understand it, even if you didn't finish today. You can watch it. We keep telling you. You must understand this thing. If you understand this thing, believe me, if you start either a bank or become a wealth manager, some of you don't do it because of you're afraid. You're afraid of you don't know whether you lose the body. But if you know this thing, you can never. If you understand it, you must understand it. We teach it again in another form. You must understand how to know the economy that is strong and the one that is weak.
Hello, sir.
Yeah.
Yeah, I still wish there would be a way you could at least make a video on how we can go to research it ourselves.
Oh yeah. This is broad. We're still going to give you another fundamental analysis, but I can still also give you your own assignment to do. You can try to tell me. You can go and do maybe research, maybe let's say euro and which this thing. Let's say maybe you can say euro and dollar or euro and Chinese. Trying to know what influences European economy, what influences maybe Chinese economy. Then when you see it, then you can start asking more. What is the percentage of this and that? Then you can or do by yourself to know whether you can arrive at calculation. We still give you another fundamental analysis, but it will not be on this top fundamental. It could be another one, but it's the same thing too, but another pattern of teaching you. You must understand it. Don't worry. It's a stage by stage.
Okay. Thank you so much.
You must understand it. Now, the last one, your time is over. Shall we close? We have not done
No, sir. No, sir.
Sorry?
Please continue.
But I'm time conscious. So we have a non-farm payroll, which is another fundamental, but that one is live. It's coming. And it's coming on Friday, which is on 10th. So it's part of the analysis I gave to you, but it's in support of dollar. Look at it here on 10, non-farm payroll is part of the thing we are teaching today. And they also have unemployment. Sorry?
I wish let's do it live on that day.
But it fall off within our training day. This training we're supposed to do it 2 times a week, but I'm making it up to 4 times a week now. Because I just want to cover a lot for you guys. So if possible, we can trade live. Okay, I'll be in the office, not here. I'll be in our trading company. I work with a company. This is not my major job. So if I'm there, I may ask for you guys to join me on live. Do you understand?
Okay, sir.
So when we are going live, I will on the Zoom so anyone can just join and ask any question. So we have unemployment rate now coming. So let's do another practical within 30 minutes, then we can close. Then we have unemployment rate is coming, which is followed by non-farm payroll. The analyst is expecting 160,000 job, so 164,000 job. On November was 277,000 jobs. Then by Friday, we will be able to see what is the outcome here. What the outcome will be here by Friday, which is on the 10th. And now, if we have more positive analysis, they're already expecting a positive result. So if you have more positive result, it also will add to our analysis that, of course, dollar is showing a very strong sign. Then on that note, on which currency are we going to trade it on? Let's say on Euro USD, if we use it on this thing impact Euro USD very strongly. So how do we trade it? For me, if the report is good, please take note. If the report is good and the whatever came out at a low price, I will not sell. And please don't sell. You don't understand? If the report is good, like if the report is in favor of dollar, and the price, their price came out extremely low here, don't sell. I mean, you know that this market is coming down. If you keep coming down tomorrow and Thursday, we saw it 1.2, like within this area, and the non-farm payroll become positive. Don't sell. But now, if this market rebound tomorrow, like within this point, and the report is good, please sell. Then,
Sir, please, how will someone know if the report is good or not? Like,
yeah, look at how you would know. Here, they are expecting here they are expecting 164,000 jobs. They are expecting 164,000 jobs, and by Friday there will be a release. So it could be the same 164,000 jobs, and it will also be here in English sentence. It's loading, like you will see it here, where they will give it as they may say something like this. You see here? Can you see what I'm circling? They said the total non-farm payroll employment rose. They will use a statement like rose by 222,000 jobs, and the unemployment rate changed little to 4.2%. Do you understand? So from there, but if it's not good, they will change this word to maybe fell by. It means that the unemployment, the non-farm payroll came out negative. So if it came out negative, it will not impact strongly again on the euro. So now, on Euro US now, based on the fact that the price is low, if you buy Euro US, you make profit. There's something in my mind. I don't know if you guys have gotten this. The purpose of this class, if you have gotten the purpose of this class is to let you know the position to be taken more than the other one. Do you understand? Now, if the non-farm payroll came out, it become negative to dollar, this Euro USD may shoot up again. That's what I'm trying to explain.
Okay.
Yes. So if it become negative, now remember the price is low. And the price, as this market price is low, is very low. We as an investor, we have know that dollar is strong, but the price is low. I mean, the price of euro and dollar is very, very low. That's why I told you, no matter whatever we have analyzed, yes, the fact is that dollar is strong, but we'll be looking for a good price to invest. Understand? We will always be looking for good price to invest. That was why I told you guys, when this market was going up here, this market was going up, I told you, if you get to this point, we should sell.
Yes,
I don't know if anyone can remember when I made that statement.
Yes, that is what he said.
Yes, I said because of dollar is strong. But assuming you maybe obviously saw it here and keep selling, believe me, you're not on profit. Despite that dollar is strong, you're not on profit. So when you have seen a strong economy, knowing the buying point is now another thing a trader need to be put into consideration. And that's why I said, if this price came out, the report came out when this market has seriously dropped, it came out positive for dollar. Don't continuously say because the price is already low. There may be chances of rebounding and you make money as quick as possible. That one does not change the fact that dollar is strong.
Okay.
Yes, it doesn't, but just that it will take you time, but you're also in a good position, but on a wrong price.
But sir, I have a question.
Okay, answer your question.
Now that your data analysis, fundamental analysis is saying that dollar is strong, and now getting no farm payroll, and now the expectation is saying that maybe it comes to be negative against dollar, and the price came low, the price of euro US came low. We buy.
Even if you become negative against dollar and the price of euro US is low, I think.
Yes.
Yeah, sure, you buy. So if the price is low and it becomes negative on euro US, then it means that the market will shoot up. It will rise. Now, as it's rising, it's getting an opportunity for dollar to continuously dropping. Remember, other factors is there that strengthen dollar. Market participants will always be reacting to those news, but at the end of the day, the stronger economic event we lead more on the chart. Like the chart.
That means the buying will be short.
Sorry?
That means the buying will be on a short term.
Yes, perfect. Because of that there are other factors that dollar is still strong despite that this month people didn't get a job. You may not know why people didn't get. People may even choose not to apply for a job because they're going for Christmas. Many things can affect those non-farm payroll. It does not mean that the economy is in shambles. No, it's just one factor that reacted in the market. This course is very simple if you understand it properly. Or what you're talking about on fundamental only helps you to know the strength and weakness of the economy you are trading with. That's the essence of fundamentals. Do you understand? It helps you. So it does not give you, it's not for immediate gain, but it will give you chances to be on a long-term gain. Do you understand?
Yes.
So I have a question as well.
I have a question.
I have a question.
Okay.
My question is, how do you time the market in terms of entering a trade? Is it after immediately the news is released, or how long should you wait for you to end after the data has been released?
For me, I'm already selling this market. Let me be honest with you guys. And now, dollar is strong. The market coming here. I follow you guys and sell this market. Then the analysts are already talking about that there are chances that the non-farm payroll report is also positive to dollar. Me, I'm already selling. So that sell, I didn't close it because there's small insight that the non-farm payroll coming up next tomorrow will be positive. You know what I mean? Giving you what's most likely going to be the outcome. It means, yes, it has not come out yet. I'm already on the sell already. So strategies kind of differs. If he doesn't want to sell and you want to hold on, fine. Maybe if you're holding on, immediately the report is out, then you place a sell. Sometimes non-farm payroll can be volatile because many brokers can change spread. Sometimes you want to buy immediately, it can be difficult. You may use pending order to place it, place a trade so that it will trigger. Even when you want to enter the trade at the center, if you didn't enter, your pending order can trigger it. But me, I'm already on sale yesterday and I did not close it. Sorry, on Monday, I did not close it. I didn't close it. and I will not close it. Because I'm making profit. And the analysts are already expecting that the market will drop more. So I will not close it. So that also brings us to the current market now. From what you have analyzed now, obviously take the note, there's strong US economy this time, which is giving a strong dollar. So our sell analysis on euro is still very valid. Take note. So if you sell here, expect to live here. Or if market break this point, expect to live at 1.06. Take note. Our sell is still active. I mean, we'll be selling more of Euro USD this time than buying it. Take note. From now till Donald Trump take over, even after he took over power, from now till March, we'll be selling more than to buy, but we will not be selling at a lower price. We'll be selling more on a higher ones that is a shoot up. Orderly, take note. We'll be selling more on Euro USD than we buy. So our own work is to be letting you know those entering points. Do you understand?
Yes, sir. Yes, sir.
Our own work is letting you. So now,
sir, please,
okay.
I have a question.
Yeah. Answer a question.
Okay, I'm really struggling to understand this NFP thing because I've really failed in that aspect previously. Now you're saying that if the market, like this Euro USD, if it keeps going down and the result comes out positive, it means that we should not sell. Is that what you're saying? So it means we can buy then?
No.
Because I'm kind of not clear.
Okay. I got you. Go ahead.
Okay, I'm just wondering if, let's say from now till Friday, the market keeps going down and we now get a positive report from NFP. Does it mean we should not sell, or we'll wait for it to go up before we sell?
Fine. It's the second option. I will wait for it to go up. Do you know why? Felix should be aware. We don't invest at a lower, we don't sell at a lower price, we sell at a higher price.
Okay.
Yes, so that's what I told you. If we do this, if nobody's selling now, this market keep coming down, getting to this point, and they're still telling me that I'm also seeing more confirmation that dollar is strong. I will not buy, I will not invest at that extremely low price. It's a trading rule. Yeah, I will leave it. It does not mean that the market is not good for dollar, but I will not invest in that price because the market will definitely go up. You don't understand? So when it goes up, and they started like do consolidation, then I will not enter the sale.
All right.
So that will make me, I will not be on like a place where I'm supposed to get, but I still lose money. Despite that I'm in a right economy. That's why many traders lose money.
Okay.
Yeah, the point of entry matters a lot. Yeah.
All right. Thank you.
Yeah.
Okay,
so
yeah, Mr.
example is promise.
Hello, Mr. Che.
Is it promise? Yeah, promise or prayer is your name. Example is what we're analyzing on Canada. Because
hello, Mr. Che.
Sorry?
Yeah, please, still on this Euro USD, please, can you go back to just as a follow-up? Okay. So invariably for somebody that wants to enter the trade, it's still favorable now for sale. Taking care of your risk management. Yeah,
sell is more in the market, but look at how it works. Here is a retracement point for now. Okay. Do you understand? Yeah. So kind of if you place a sell, if you like a stop loss, you can put your stop loss within this range. But make sure you always exist at this point.
Okay.
Do you know why? We have a rule. We don't like to be in the market when it's extremely low, because it will definitely go up. Market goes as a wave. That's market rule. No matter how bad euro is at that particular time, it will always be rebounded. Do you understand?
Yes.
So, for example, look at the example here. For 2 days, the euro rebound. Here, euro rebound. Here, euro rebound. Do you understand? Here, euro rebound. So it will always, but at the end of the day, the one that is stronger will be dominated. That's how the market works.
This is a non-farm payroll. Some traders enter the trade before they release the data. But is it guessing they do, or they can calculate the data before they release the data?
Some not guessing. Anyone that want to enter, asking why. That question of why is what is important. So if it didn't give you a confirmable answer, you just know that the person is guessing.
Okay, sir.
For me now, why I'm trying to sell euro US because it's already the dollar is good for trading, and analysts are expecting the report to be good. That's expectation. Most likely it may be good. There may be more jobs because if Donald Trump entered, the stock market just went up. Many companies are recruiting. You know what I mean? There may be chances that there will be more job. That I'm trying to like act based on those expectations already building up. So the market will not be extremely low against the expectation. But even at that, that's why we have to put our stop loss. Or I may just slow down, like leave the market. But I'm already in the market. I don't want to close it.
Sir, are you still on USD card, or you have closed the trade?
No. I've left the trade. Yeah. Was I in this trade? I have to check my trade though. No, I wasn't on this thread. You're the one that entered the thread.
Okay.
Yeah, I wasn't on Canada. Now, that is why I told you, when there's a sharp drop, we leave, because the way we see US dollar is still like getting more strong. Since the market broke, since this particular resistance got broken, this resistance here got broken, this one got broken. So there's no hope. It has not formed any resistance. Yeah, it's not a resistance. Do you understand? So that place is not a resistant. It's not a sign of resistance. So there's no until you form that thing. But there may be sharp drop. It can be dropping. But at the end of the day, the market will be going up. Then on gold, allies, I think you're on profit on gold, most likely. So on gold, our analysis on gold is still hold. We are not selling gold anytime soon. So anytime gold dropped, all this area buy.
Okay,
do you understand? So anytime there's a sharp drop on gold, but we are buying gold as soon as all this time. If the whole thing changed, then we will know that it has changed. Then on oil, okay, we have oil today. Let me check oil. Today is Wednesday, right?
So I have a question.
Okay, I'm coming. Yeah. We have oil. We have oil today by 4:30. They're expecting a decrease, like kind of a shortage. So if there are more shortage, let me check the price. They're expecting a decrease, like a shortage. That means they're expecting more bullish too. So we can be following it up, but we'll be existing at this point. In case I'm saying the market have not closed, but we'll be existing. We'll be trying to be existing within this area because oil may have a sharp drop here. Between 76 and within this point, unless if this point is broken, then we'll know. But we'll be checking what's going to be the outcome. If the decrease, the supply shortage is more, then it gives us more confidence. Then if you're on profit on oil and they have not closed it, you can adjust your stop loss to this point so that you will lock the profit you have made. Phyllis, I don't know whether you buy or your mind did not allow you to buy. Mensa said that she made profit. I don't know whether she's still in the market. Somebody said, I want to lend this Audacity Capital. We are closing. I don't know what's Audacity Capital. What is Audacity Capital? Who's asking question? Go ahead and ask a question. Let me click on it.
I mean that there's the terms that I'm always hearing on trading the news, like buy the rumor, sell the news. I want to learn that terms.
Buy the rumor. That is buy the rumor, sell the news. So say it again.
I have come across of hearing these terms. They say buy the rumor, sell the news, trading.
Okay, are you the one that sent that list, that note?
Yes.
I'm trying to open the page to see what it's all about. That means it's a different topic, right?
It's like a strategy of reading the news.
This is how to trade news now. It's not what you're discussing here. So they said the direction of upcoming forex news. Yes, the forex market operate around the clock days, given this market because news release a trader using a funded forex news refer to important inflation, non-farm payroll, interest rate decision. It's not what you're saying. Growth, the GDP. It's what you're discussing now. How to trade news. Let me check another one. The slide short strategy. If trading in the markets is that's highly volatile, your stop should become triggered even before the price. Buying rumor, say the news, also called trading on expectation. Yeah, it's called trading on expectation too. This is the most popular phrase used by those trading tradable forex. It is popularly lies on the fact that whenever a news announcement happens, the market movement don't always reflect what you do expect from the event. The market movement does not reflect. Okay, for instance, take that unemployment rate in the United States is expected to rise in the same rate. Imagine the same rate in the past month stood 8%, and the consensus of the government. Let me get this. The market movement don't always reflect what you expect from the event, which is by the rumor said in this. If working on a consensus 9% implies then funded, these guys, they are trying to even manipulate you, but they don't know because they're adding link of their funded program so that this is like a customized article to sell another particular product. I don't know where you got it from, but we are all saying the similar thing. Yeah, so trading spike. Yeah, our last strategy is trading spike, which helps you to trade crucial news. So, such as NLP is an important indicator release. Often this report comes out first Friday of the month. That's exactly what you're saying. How to know tradable forex news profitable. Yeah, potential risk in trading news. Why trading news? It has benefit. In conclusion, using the forex funded program means that you need. They are talking different thing, and they're also trying to pass another information to you. Somebody say, please, how do you really trade this oil? What is the symbol? What is symbol you trade? I'm confused because we have some symbol on oil. So we trade WTI. Some broker can give it to you as a CL. Some broker can give it to you as US oil. But check the prices of anyone you are trading on. Their prices can be different. Like this is WTI crude. This one here is WTI crude. Let me show it back to you. This is WTI crude, which is trending at 74.50. The current price is 74.57. This is the current price. Here is the current price. Then the other one is Brent crude. Where is Brent? This oil is Brent. Some company put it as Brent. Some brokers put it as Brent. Some people put it as oil. But how I know it is the price? The price is at 77. It's at 77. So depending, but make sure the brokers we use to trade in oil are brokers on exchange. We don't use normal ordinary CFD brokers or OTC. So our executions are done through exchange. So I don't know. It depends on the broker you want. We only trade with highly regulated brokers who execute our order through New York Stock Exchange. So if you want to use our brokers, we can send it to you. Then you can be using them to trade on commodities. We are using commodity-based brokers for commodity executions. Then we can send it to you. So now I don't know if there's any question. Did you guys understand what just happened? I mean, can somebody tell me exactly what he or she learned? Anyone, please. Seems that
okay, Mr. Uche, let me just say something. Although I've been away for like 10 minutes, I'm in another meeting. But I think from the 10 fundamentals, I have been able to learn how to merge the fundamentals with price actions. So when you compare the economics of two countries, then you now marry it with the average price movement of the charts and decide whether to trade or not.
Yes. Then who else?
Good morning. Sorry, I came in really late today. I thought it was 10 a.m. because it was 10 a.m. So will it be available for the recording? Where will I find it after the class, please?
We will send it to we'll send it to you on WhatsApp. But if you want more of the previous ones, the one that's on cloud, we'll send it to you too as well. Then there's the one we can refer to you on our YouTube page, which you will watch.
Okay, thank you very much.
So when you have watched them, you ask for a review. There will be a session with you and other direct section like live session or a chatting session where we answer your questions.
Okay. Thank you.
So guys, by 4, we'll check what is going to be the outcome of oil. They will be able to place trade on oil. I will let you guys know. So if the report is still shortage of supply, you know what I mean? Then we will buy more of oil. We'll keep buying oil. We're not changing because oil analysis is a straightforward analysis. We'll keep buying more of oil. Then on the euro, promise, take note, and the other guy that asked that question is overcomer. Also take note. So look at even the euro is also dropping more. I thought it's dropping. So on this market, we are selling. But what you are saying on the analysis is that if the non-farm payroll come out at extremely low price, we are not continuing again. We allow you to respond before we continue the sell. So we are selling more of euro USD more than we are buying it this time. That's our analysis on oil based on the factors we have. We are selling more, and the same thing is also applied to the £10 USD. Please also take note. So this is a practical example of what I'm telling you. Orderly, take note. Let's look at this chart now. This is a practical example. Pound is extremely weaker than euro. Now, this market is now extremely, look at it. I mean, it has broken this point. Look at where it is. Do you understand? Orderly. As you can see now.
If can somebody enter buy on here now?
No, don't enter buy, but leave it. Me, I will leave it. I won't like to be selling at that point because what of if the market rebound there, the price that I bought I sold will be lower. I will not gain fast. There's no chances of buying. You are buying only when the £10 is having something to recover from. But now it has broken that point. Assuming we saw that on euro and the non-farm payroll come out, we are not selling. Do you understand? I will not encourage you to sell at a extremely low price. I mean, the last person to sell, but you shouldn't buy again. Don't worry, you shouldn't buy. Because if you buy, you will not get it now. We will buy when the effect is over. I will show you, you will know when the effect is over in the market. When the effect is over in the market, it will start forming something like this. It will form something like this, like shadow. It will also form something like this. You know that the effect is over. I will show you. And now it will not be during the market time because the session is still on. This is morning time, so you can't go the opposite. But if you had placed the sell on that Monday, we said it now. By now you have no profit. Then you will leave the market. Wait, but the cash out level is on dollar. Is dollar we are cashing out for now, not on pound. Do you understand? But now euro have not lost as much as pound has lost. So assuming you place a sell here, we always find a way to exist maybe around 1.06 if the market keep falling.
So I have a question.
Okay.
My question goes this way. This calculation now, the fundamental calculation, do we calculate it based on the previous data or based on current data?
Data or chart?
I mean the fundamental test.
Yeah, you calculate it based on the current news. I mean, the current data with the current economy data we have. For example, we have quarterly reports. Most of these things are published quarterly, every 3 months. This one coming up today is the end of last year quarter. So the one coming up on Friday is end of 2024 quarter. I mean, it's December report that is being published on January, which can determine the future performance of all these things. So based on what happened in the past, the interest rate is okay, the other one is okay, this one is this one is higher than this one. So at the end of the day, it has given us insight that dollar is strong than maybe JPY. Of course, dollar is also strong than euro. But now, if that changes, we still have to change our strategy.
I have a question.
Okay.
So when you check the news, yeah, there is sometimes, I want to give an instance with the CPI. So there'll be 3 types of CPIs coming out. There'll be core CPI month on month, there'll be CPI month on month, and there'll be CPI year on year. How do you combine these 3? And they all have different percentage, like different figures. So how do you really use these 3 figures to know which one exactly affects the dollar or the pound or whatever currency?
But the strategy we are using now, we are not just using one factor. We use a coherent strategy. So when we get positive CP, consumer price index is very high on the monthly level, and for the short time period. Do you understand? We also consider the other currency you're trading. What is their own index? One, and what is the strength of the economy? That's why the essence. I mean, the area we're trying to understand the market. Then they have what is called monthly report, quarterly report, and annually. So, but we are not using only one factor to trade in the market this time. We're trying to use more than one factor to trade. As you can see the chart has really changed. Most of this chart goes long time for a long time. So then it goes down for a long time. It means that it's not one factor that is controlling the market. There are a lot of factors. So we don't use only one thing again. You don't understand? So the essence of our market, this is to let us know the direction of the market, so that it's not that we are trading for a long time, but we trade more in that particular direction more than it. Do you understand? Even though we are trading daily, we'll be trading more of that particular currency that is stronger than the one that is weak.
Okay.
Yeah, that's the essence. But so at the same time, we will be careful of not going against trading rules like buying low and selling high. That's why I emphasize that if the market is extremely low, even though the dollar is good, that we are not going to sell at that particular price. We allow you to rebound again, then we buy again. So then we sell again. Do you understand? Yeah. So our mentorship class works this way. Look at how our mentorship works. Our mentorship is to be giving you tips, even on the Telegram channels, showing you when to buy those things, because sometimes some of you may be busy. You may not know when those opportunities come up. Then we'll just do a screenshot and let you know. Or we can send you a chat directly. For those who are on my one direct mentorship listen. So anytime I present that trade, then I will just chat you personally. I have a couple of them. I'll chat you personally, look at this market. Then you'll now be able to place them. But now you have already known the fact that dollar is strong, United States economy is strong. Then that is first reality. So anytime we are investing on the US economy now, you have more confidence that you will gain in more than the chances of losing it.
So I still have a question.
Okay, this will be the last question because it's 42 minutes away your time.
My question goes on the current news coming up by 2:08 by 2:15 on our time.
Like today?
Yes, today.
What's the name of the news?
ADP.
Okay, ADP unemployment 137, 139.
And unemployment claims. This news, the ones coming on Friday.
Sorry?
I mean, what's the difference between this ATP non-farm payroll and the normal non-farm payroll coming on Friday?
See, can you read here? You saw it?
Yeah.
It's an estimated change in the number of employed people during the previous month, excluding the farming industry, and the government, excluding. Then, see non-farm payroll. Can you read here? So this one talk about the entire change in the employed sector during the previous month, excluding the government, excluding the farming industry, but not the government. Then this one talks about the claims, those that claimed unemployment. If you live in the UK, US, Canada, some areas, people that that file for unemployment claim. So, like this is the number of individuals file for unemployment insurance for the first time during the past week. So it was about the changes. So if the number is high, do you understand? So it's bad. But now the strategy we are using to teach and trade this year is a coherent strategy. We are not using one factor. Take note, overcomer. You change that to your own strategy. Things have changed. So we are not using one factor these days because markets reality have changed. So we're using more than one factor.
Should we calculate all these things together? These claims and the
Yes. So we are calculating the major things that controls the economy. That's the strategy we're using. That is the strategy we're using to trade this year. Because markets have changed. And the Trump system will also change the market more. Yeah. So that is the strategy we are using this year. Overall, data is what we're using to trade in any of these things, especially on currencies. You just take note, that's the strategy you're going to use on our school, which we want to show you. So we want to be knowing where the market is going at a particular quarter. That's our system. Where it's going every 3 months, where is it going? So that if we're able to identify it, we keep following it, then you make a lot of money before that thing will change. Do you understand?
Yes, sir.
Yeah. Even if you're a day trader, but that's the strategy we'll be using. If you like being an hour trader, you'll be using one direction. We don't want it to be speculating and end up losing more money. So we're ending it here. If you have more questions, I'll be free to answer you. This video is recorded. I'm sure everybody's quiet because of it's fundamental, it's not technical. But what I'm saying is that our trade on euro is still valid. We are not closing it. Promise, I'm sure you're no more on Canada. We don't have an opportunity on Canada for now. We can't ask you to buy it for now, but we have our reasons too. When we see opportunity on Canada, we'll let you know. Then, they have a new government, so we have to be careful. We don't know what's going to happen. But if you see opportunity for sale, then we'll sell more. We don't even want to buy it. Then, by 4 or 3:30 p.m., I will give you guys more opportunity, more analysis on oil and what is gonna happen. Then there's another one we are trading. Somebody can remember, is it US card? I didn't show that chart. We did it last week, and I don't know how many people are trading on that one. Those things are still valid. Then our analysis on gold is still valid. Keep cashing out on gold. Keep cashing out. every time the gold dropped, we let you to buy again. Don't sell much at a lower price. Yeah. So gold is still okay. Somebody said, I will learn more fundamental through you. Yeah, fine. So we will also give you more of this fundamental in the coming days. There are different layers of fundamental, but take note of these 10 factors that influences the market. I will also encourage you to do more of your own research. Those of you who want to, who need more assistance, please chat us personally. We'll be able to help you. Always reach out to us. So if you want to place those trades now we have analyzed, let us know. If you want to place trade in the oil and gas time by the the crude oil inventory report, also let us know, because we will not be on the Zoom then be able to assist you on chat and help you on those trades. Yes, yeah, fundamental is a big point of 90% of traders all over the world. They don't want to hear that one. One is sometimes critical to understand. That's why people struggle. But if you understand this thing, you do well. That's what people like to show. People just like the chart, demand support and resistance, stop loss, take profit. That's what they understand faster. But if you understand this one, you have scaled from that level of knowledge to a higher degree of knowledge. Then you will now know what you are doing at part time. But just take note of what I've established. The dollar is very strong. So if you have any other question, just let us know, and we'll be available to help you on the chat. Do have a lovely day, all of you.
Thank you, sir.